Hi, and welcome to the show. Subscribe at kevinmd.com/podcast and get CME for this episode by clicking on the CME link in the show notes. Today, we welcome back Noah Kaufman. He's an emergency physician and financial planner. Today's KevinMD article is titled Bitcoin Investment for Doctors, Risks, Rewards, and a Necessity of Diversification. Noah, welcome back to the show.
Thanks. It's great to see you, Kevin.
So Noah's been on several times. Go to kevinmd.com/podcast. Upper right-hand corner, there's a search bar. You can search up his name to look for his story in previous episodes. But let's jump right into today's article and get a little update on Bitcoin and cryptocurrency. But this particular article, how did it come together?
Well, I think that it's a really interesting time. I think there's still a lot of stigma within our colleagues, within our social groups, within medicine in general about atypical investment strategies. And I think there's been a lot of colleagues that I've been speaking to that have an interest, but still have a great amount of skepticism, which I think is warranted. And so I was asked to write another article as an update because I think we started doing this a few years ago. So this is the yearly kind of Bitcoin update.
All right. So a lot has happened since we last spoke. Bitcoin is
Certainly.
more than 50% off its highs. We've had several high profile, I would say, scandals, FTX, which is the
Yeah.
cryptocurrency exchange, being kind of among the most prominent. So just where do we stand? We're speaking in the beginning of September 2023. What's the status of Bitcoin and cryptocurrency today?
Sure, absolutely. Well, it's very interesting. I don't have a crystal ball, first and foremost, and I have a pretty traditional asset allocation. My brother and I have a private equity fund, and we advise physician groups, we advise others. And just so everybody knows, I'm not a champion of Bitcoin where it should be half of your portfolio type of thing. Bitcoin is an asset class, and like real estate or equities, it's perhaps a part of a well-diversified portfolio. And I think first and foremost, physicians and sophisticated capital allocators need to understand that although it has a place, we don't have a crystal ball and anything could happen. And I think that's reflected in the price of Bitcoin and the volatility of it. It's still a very small market cap compared to real estate or global debt or obviously equities, real estate. All these asset classes are well developed, well entrenched, and they're where we should be allocating the majority of our monies. However, it's not every day that a new asset class gets created. And Bitcoin is such an asset class. It's based on math, it's based on code. And as such, it's the world's first actual yardstick, which is immutable and incorruptible. And I can get into that. It's also a very big experiment still. And, that's why the price fluctuates the way it does. I think we'll see price stability over time. And if it doesn't go to zero, which I think, is a low chance, but is still a possibility, then I think it's an asymmetric bet, which is worth, at least a small portion of everyone's portfolio, whether it's a 0.5%, 50 basis points, or 100 bips or 500 bips. I think that it, which would be, I think, a pretty oversized weighting. I think that it's a worthwhile asset class. And to answer your question more specifically, we are at the end of the best that we can see, and the best that everybody can think of is that we're at the end of a bear market, and Bitcoin seems to follow these cycles where every 4 years the halving takes place. That's due in about May of 2024. So we're getting close. And typically leading up to May, there is a bear market for the final 2 years. And it's almost like an election cycle. And then starting in May, the number of Bitcoins is going to get cut in half that are produced every day or every block, every 10 minutes. And so because of that, there's going to be half as many Bitcoin. And when supply is cut in half, if you have the same amount of demand, well, I think everybody understands what happens. And that's what leads to increase in value.
So you said that Bitcoin may play a role as part of a diversified portfolio. You mentioned something like 0.5%, maybe going up to 1% because of the potential asymmetric concerns.
Yeah.
So talking to physician investors, not every physician investor should invest in cryptocurrency. What kind of questions should they be asking themselves to make sure that there are candidates to invest in cryptocurrency?
Absolutely. Well, and first and foremost, I would I would be careful of using the term cryptocurrency for a couple reasons. I think that we're starting to use the term digital assets. Cryptocurrencies are the things for criminals and are the that worrisome. It's mostly scams. There's like Bitcoin and then there's everything else. 90% of my digital asset allocation goes into Bitcoin every day through a DCA, a dollar cost average auto buy mechanism. The rest of cryptocurrency, I actually dabble in with about 10% of funds, but it's because I'm a gambler. Look, I'm an ER doc. I love risk and I love taking those bets. To answer your question, because it's an asymmetric bet, and because if you're only putting in half a 100 basis points, a half a percent, I don't think there's a lot of risk. I don't think any physician would really be in trouble if they lose half a percent of their net worth if Bitcoin goes to zero. So I do think that it's an appropriate risk, as it were, for just about everybody, because the question is would you wager half a percent of, and it's independent of your beliefs of, you can scoff at Bitcoin, you can think it's going to zero. I try and be objective. I have no idea what's going to happen, but the technology is very interesting. It's the only network that's never been hacked, and it's fascinating. It's a fascinating invention, actually. And as such, I think that, if you're presented with a new asset class, which is about to face the pressure of buying from ETFs that are eventually going to be improved. I mean, you look at what happened to gold 15 years ago or whatever it was, 15, 20 years ago when it was approved as an ETF. The buying pressure alone puts Bitcoin, the calculations are at 180K, which is whatever it is from here, however many X. So that's what an asymmetric bet is you could lose half a percent of your net worth or a quarter percent or whatever you decided to allocate, or that could go up in value 10X, or even in the crazy bullish cases that are hard to even imagine, it could go up 100X. Which it's totally reasonable. 100X from here would be $2.5 million or whatever on Bitcoin. And there's a lot of math that makes that very realistic as a possibility. I know it sounds impossible. Unfortunately, the purchasing power of the dollar has been going down, down, down. So, what's the purchasing power of a Bitcoin at that point? It's kind of a scary potential future. So, but that's an asymmetric bet. And as such, I think that the bigger risk is not having an exposure to something in your portfolio that has asymmetry, whether it's Bitcoin or microcap stocks or whatever that can move the needle for you. Because I think most of us see that we're fighting, it's a scarcity mentality right now, and we're fighting interest rates versus inflation. And none of us thought inflation would go to 8 or 9%. I mean, that is mind blowing. And, the Fed is fighting it hard. But do we go back there like in the 70s? Do we go kind of up and down through a volatile time? It's possible. And if that happens, we can see a lot of global debt and a small piece of all the asset classes get sucked into the black hole, which is Bitcoin. And if that grows from a $700 billion asset to a multi-trillion-dollar or $10 trillion asset class like gold is, or 15 trillion or whatever it is, you're already talking, $500,000-$600,000 Bitcoin. So I think that it's appropriate for just about everyone, and you need to mitigate risk by position sizing, and that's what we advise our clients.
Let's talk about the actual mechanism of purchasing Bitcoin. Full disclosure,
Yeah.
I own Bitcoin myself through Coinbase, but I know that there are other ways of owning Bitcoin. And I think that with the collapse of FTX and these exchanges, what's your confidence that these exchanges will continue to be healthy going forward? Because with my personal experience at Coinbase, is sometimes not as user friendly as something like a Fidelity or Vanguard, and we have it's just not as sometimes it's just not as straightforward as buying a traditional exchange traded fund or equity. So to talk to us about the mechanism of buying Bitcoin, and if a physician listening to this is maybe interested in doing so, just talk about some of those options.
Sure. Well, Coinbase is a perfectly fine place to buy Bitcoin. It's one of the biggest. There's a lot of big money supporting Coinbase, and it's doubtful they're going to fail. However, that being said, owning Coinbase and not self-custodying and owning it on a centralized exchange is nuts, and it defeats the whole purpose. It doesn't make any sense whatsoever, as people learned with FTX, which was also huge. And you got guys like Tom Brady losing $400 million worth of Bitcoin or whatever he had. FTX, Voyager, Celsius. And look, I lost probably 20 Bitcoin through Voyager. Luckily, I have got a lot of self custody, and I've got Bitcoin in multiple different buckets, hot wallets, cold wallets. But to not take custody of your own Bitcoin at this point, after all these collapses, is nuts. I think the government could come in and confiscate Bitcoin. I mean, and of course, this is like conspiratorial and out there, and I don't actually believe this is the case. I think the actual base case is that everything's fine on Coinbase. But I would recommend everybody take self-custody of their Bitcoin. And there's a lot of ways to do that. There's multi-sig wallets where you can hire companies to own, to help you for legacy and inheritance and trust creation. You just need a good plan, but it's like keeping, it's like keeping the original stock certificate or silver and gold in a safe or Bitcoin in a cold wallet. That's the only way that's really safe, that I would recommend holding Bitcoin. In terms of buying it, I don't use Coinbase because, like you said, it's a little bit cumbersome. I don't like centralized exchanges. I have to use them to get exposure. I don't have any affiliation with these companies, but I do daily cost averaging through Global Strike, which is an app, through River Financial, which is an app. Again, no disclosure. I just do a daily buy through them. And then I have it set up that every, I think 0.05 Bitcoin that I accumulate, which is like every 10 days or something, I transfer it to my cold wallet, to my cold storage. And so I just put that address in there. It's very easy to do. I mean, as physicians, it's like easier than stitching. It's something you got to learn, but it's pretty easy. So Coinbase is fine to buy. There's other places that are fine to buy. I highly recommend taking it off into cold or hot storage at any point in time, and take self-custody, and just make sure you have a good plan. Make sure you've backed up your private key and you have it written down on a piece of paper that you give to your brother in San Francisco and your brother in New York or whatever, family, and then you put it into a safe deposit box or something like that.
Now, you make this sound quite easy in terms of taking custody of your own Bitcoin, but you actually went through a lot of terms that people who may not be familiar with the process, there's a little bit of a learning curve here, right?
Yeah.
So in general, how comfortable should physicians be before pursuing all of that? Because we're talking thousands, if not tens of thousands of dollars that, again, not as easy as a traditional Vanguard or Fidelity account. There are actually several steps in order to take custody of your own Bitcoin. So I think that I just want to be clear, what kind of comfort level should a physician have in that system in order to kind of move forward with that step?
Yeah, absolutely. Well, it's tough. I don't think the technology has caught up yet. And I think it will. I think, and there are companies like Ethos, who I'm advising, full disclosure, who are trying to make it easier through wallets where you only have to memorize 3 words and it's stored on the secure element of your phone. Or, it's some of these other companies and the hot wallets you can download to your phone and cold storage. It's as easy as watching a couple YouTube videos. I think that it's worth becoming comfortable with it. I do think it's going to get easier and easier, just as all technologies do. I think that it's worthwhile. And I also, look, I do consulting, work for this with physician groups, and I'm not cheap. And usually it takes 15 minutes or 20 minutes maximum to really walk through the steps of A, B, and C. And then you always do test amounts. If you send $5 or $20 to an address in a wallet, you see it appear and you say, okay, I feel good about that. And before you send more, and then you can send, but it's extremely rare to actually have problems. The process is really easy. And, I think to feel comfortable with it takes a little bit of time. But again, I think it's worthwhile for physicians to have an understanding, no matter what your belief is on it. It's, I think it's worthwhile.
Let's talk about the status of a spot Bitcoin exchange traded fund. I know
Yeah,
BlackRock, which is obviously one of the largest ones, they applied for
yeah.
it, and I know that the SEC were just kind of waiting on their approval. So, what's your forecast on that? And should physicians just simply just wait for a spot Bitcoin ETF rather than dealing with cold storage and all that, and wait for that to come to fruition before dabbling into Bitcoin?
Yeah, that's a great question. I think the problem is the moment an ETF is launched, first it's going to be front run, most likely. And again, disclaimer, I have no crystal ball. I have no idea what's going to happen. The market is forward looking, so you could ask, well, why isn't it front run now? Why isn't the price of Bitcoin $180,000 per Bitcoin? And I think those are valid questions. I wonder the same thing myself. That being said, if a Bitcoin spot or when a Bitcoin spot is approved, because I think it is a matter of when and not if, I think they'll probably all be approved at the same time, so the SEC and the government isn't looked upon as having favoritism towards like BlackRock, who's obviously intimately tied with the Fed and is involved with all kinds of the machinations of the U.S. dollar system and the Federal Reserve Treasury system. So I think that there's, grayscale is probably going to be switched over to an ETF. Obviously, there's a lot of other ETF applications right now. BlackRock throwing their hat into the ring kind of shows that, if anybody's got the inside word that it's going to be approved, it's BlackRock, right? And so I think the forecasts are that it's 80% chance it's going to be approved. Even if it's pushed back, eventually it's going to be approved. I think that it'll be approved just in time with the halving, is my guess. And I think once that happens, the buying pressure is going to be enormous, because then every pension fund, every mutual fund can get exposure to it. And it's a very tax efficient, very low risk way to get exposure to physical Bitcoin. When I say physical Bitcoin, I mean actual Bitcoin, not derivatives such as paper futures or rehypothecated Bitcoin. So because of that, I think that once the Bitcoin ETFs are approved, along with the halving that's coming, there's a good chance that we're going to see Bitcoin fly to $100,000 a Bitcoin, 4 times from where it is now, or even $200,000 a Bitcoin. And it might even go a lot higher before coming back. And volatility, of course, is a big part of this. So I think if you wait, you run the risk of buying when everybody buys. And I'm not sure I would recommend buying Bitcoin to physicians if it was more de-risked, if you didn't have that asymmetric upside. So getting into Bitcoin at $200,000 a coin, then you have to have a really long-term vision and say, okay, I'm going to buy it now. And then you have to think it's going to go to 1 million or 2 million by, eventually by 2040, and that this is going to be something you're going to leave your family, and it's not going to be hacked by quantum computers or some other, zany downside bearish scenario where Bitcoin doesn't pan out, which by the way is plausible. So I would not really recommend to friends and family or clients to get into Bitcoin at $200,000 a coin or $100,000 a coin. You don't want to FOMO into anything when it's the whole buy low, sell high.
Mm-hmm.
Well, right now we're in the midst of a bear market. Bitcoin has been going up and down, and if you look at the chart, it's following this really kind of tight channel, and it's been obeying this channel pretty well. And we haven't seen a break of that. And right now we're on the bottom side of the channel. So this is the time to get interested in it, I think, and to maybe put a little bit of speculative, allocation towards it, depending on your risk tolerance. So I wouldn't wait. As a matter of fact, we can revisit it next year. And, if something happens, I'll be the first to change my mind on it and, go back to talking about real estate, which is the largest part of our private equity investment portfolio.
We're talking to Noah Kaufman. He's an emergency physician and financial planner. His KevinMD article is titled Bitcoin Investment for Doctors, Risks, Rewards, and the Necessity of Diversification. Noah, so let's say I'm a clinician listening to you and I'm interested
Yeah.
in perhaps taking the next step. Let us know what that next step is, and maybe you could end off with some take-home messages.
Yeah, absolutely. So I think the next step, I mean, look, it's really easy. And again, no affiliation. I don't get any money. I don't get any referral or anything. But I would download the Global Strike app or the River Financial app. I'm personally using River right now. You could use Coinbase. The fees are a lot higher and it's kind of wonky to get around. But I would go in there. It's a very simple interface. And, you just start buying $10 worth of Bitcoin a day and see what it's like, or $20, whatever you feel comfortable with. And then you can watch a video. You could download any type of wallet, like a Moon wallet, MUUN, or a Green wallet, and then you can just transfer the Bitcoin that you buy to your own wallet and just experiment with teeny little amounts, and get to know about it. There's a great book out there called it's the main Bitcoin book. God, by Safdien. I don't remember the exact name of it right now, but you can find a Bitcoin book if reading is your consumption, knowledge consumption modality. Otherwise, just get on and watch a little YouTube video. I would just get started.
Noah, thank you so much again for sharing your perspective and insight. And thanks again for coming on the show.
Yeah, absolutely. It was a pleasure to be here, Kevin. And as always, we'll keep updating people as time moves forward. It'll be interesting to see what happens.